So I think a lot of you who were up in Albany for PAM's annual conference heard that there are some new information or clarification on information with respect to the surpluses that you're able to maintain. If you remember, the surpluses went into effect for the 22-23 CFR year or SED year, whatever. Those surpluses allowed you to maintain reserves of 11% for 22-23, 11% for 23-24, 11% for 24-25. For 25-26, that's down to 8%. Then it goes down to 5 and drops down from there. So it's clarification on how we can utilize these surpluses. So this all came about from some questions that I had reached out to SED to get clarification on in terms of what the understanding was. This information is relatively new. It only came out at the end of November when SED responded to questions. For many of you, you had already filed your 2024-25 CFR. So we'll kind of talk about that a little bit. So starting with the first question, what I was looking to gain an understanding of, because when I had some preliminary conversations, there was an understanding that potentially we could utilize surpluses that were generated in one program in other programs. So the question I threw out to SED was, please confirm that if a provider has multiple tuition-based programs and it creates a surplus in one of its tuition-based programs in the current year, it can utilize that surplus with appropriate board approval. Remember, any surpluses, it's clear within the guidelines that if you have a surplus, in order to utilize that surplus, the board has to approve the utilization of that surplus to offset losses or overspending in a different tuition-based program in the current year or future years, provided such losses overspending were the result of allowable costs in excess of non-direct or total cost screen. So the original thought was that if I generated a surplus in the 9100 program, I can only utilize that surplus in future years or back years within that 9100 program. So it came to my attention that maybe I could use it in other programs too. So the question was, if I do have a surplus in one program, can I use it in another program? And the response back from SED was, yes, that's correct. A surplus generated in one program can be used in other programs. So if you have a surplus in any one of your tuition-based programs, 9,000, 9,100, 9,160, 9,115, 9,165, and also SEIT, 9,135, those surpluses can be utilized to offset allowable losses within any of the other tuition-based programs. And what do I mean by allowable losses? An allowable loss would be if I hit so they're allowable costs, but I'm hitting either a non-direct or total cost screen, right? So I went over the 35% threshold, so I'm hitting a non-direct care screen, or I spent too much money, I'm hitting a total cost screen. So the interesting part about this is if I have a surplus in my 9100 program, and in the same year, I'm hitting a non-direct care screen within my 9100 program, I can actually use that surplus to cover my over expenditure within the 9100 program, because as you can see here, results, it was in the current or future years, right? Current or future years. So if I have like I said, if I had a non-direct care screen that I'm hitting in a program and I have a surplus in that same program, I can use that surplus to cover the non-direct care screen. That's tremendous for many programs who are kind of overspending that 35% threshold. They now can utilize that surplus within that same program or any other program to cover a non-direct or a total cost screen. Does that make sense to everybody? We go to the next slide. And the first three slides here are really just building off the same concept here, just to make sure we had total clarification. Please confirm that if a provider creates a surplus in the current year within a tuition-based program and is subject to a non-direct, as I just said, to a non-direct care screen in the current year in the same program, the program may utilize such surplus with board approval to offset the non-direct care screen in the current year. A surplus accrued in a prior or current year can be used to pay for reimbursable costs, according to the RCM, in excess of allowable and reimbursable costs in the current year, which can include costs in excess of non-direct care screens. So the black answer is the answer coming directly from SED. So SED is basically saying that if I have a loss in my if I have a surplus in my 9100 program, as I said before, and I hit a non-direct care screen, I can use my surplus to cover that non-direct care screen. So this is, again, really good news for providers that are overspending or hitting non-direct or total cost screens in one program, but have surpluses in another program. It's basically allowing you to smooth things out between the programs. Next question, again, just building on top. Please confirm that if a provider creates a surplus in the current year within a tuition-based program, 9,000, 9,100, 9,160, and it is also approved to provide SEIT services, it can utilize that surplus with board approval to offset losses overspending that occurred in the current or future years within its SEIT program. So if I have a loss within my tuition program, can I use that loss within one? I'm sorry, if I have a surplus in one of my tuition programs, can I use that surplus generated within the tuition programs within SEIT? Please clarify whether the offset of tuition-based surplus to fee-based programs is limited to only to SEIT services, or is it available to other fee-based programs such as MDE, RSO, one-to-one aids? A surplus generated in one program can be used to cover the expenses of a SEIT program also operated by the provider. So they specifically say SEIT, so we cannot use it to cover losses in evaluations, related service only, one-to-one aid. But if I do have a surplus in a tuition-based program, I can use that surplus in my tuition-based program to cover losses within SEIT. Because even though SED looks at SEIT as a tuition-based, I'm sorry, as a fee-based program, there is still a distinction, and we'll get to that in another slide, because SEIT is considered an auditable program. So SED can audit your SEIT program. They can disallow costs within the SEIT program. So because your SEIT program is an auditable program, they distinguish that from your other fee-based programs, and they couple that with the tuition-based programs with respect to the use of surpluses. Okay? That's also why, when you think about it, when you get your rate increases happen on the tuition side, and they also happen on SEIT. You're getting the same rate increases in SEIT, but you don't get those same rate increases in MDE or anywhere else. All right, so SED looks at SEIT as for purposes of use of surplus, as a tuition-based program. And then please confirm that SEIT services are fee-based services, and as such, any surpluses generated by fee-based amounts paid per delivered service and excess allowable costs are unrestricted for use by the provider, similar to any surpluses earned by any other fee-based program. So here I'm trying to understand whether, if I have a surplus within SEIT, I can use it for whatever I want to use it for. And they came back and said, although that not covered by surplus statute, any surplus funds retained by SEIT providers are not unrestricted. So they're saying they're not unrestricted. The RCM states that retained earnings or surpluses of tuition revenue over reimbursable expenses must be spent on allowable costs pursuant to the reimbursable cost manual in effect for the year in which the expenses are incurred. SEIT rates are not subject to reconciliation, but they are auditable. SED would potentially recoup funds that, according to the audit, were used to pay for unallowable expenses as defined in the RCM, but we would not recoup unspent funds. Unspent SEIT funds can be used to cover expenses of other SED-funded programs that is not prohibited under the RCM. So again, they're allowing you to use that to cover any of the other tuition-based programs. So if you have a SEIT program, and that SEIT program has those SEIT surpluses, because remember, the methodology for SEIT changed in 2015, 2016. And when they moved to the new methodology, you ended up with the potential for SEIT surpluses. Those SEIT surpluses can be used to offset losses you have in other tuition-based programs, but similar to where you can't use tuition-based surpluses to offset fee-based programs, you can't use the excess SEIT to cover other fee-based programs. You can only use it for tuition-based programs. So there's a lot of flexibility that SED just put into these surpluses. They're allowing you to use SEIT surpluses to cover tuition-based losses. And when I say losses, again, those are allowable costs in excess of non-direct or total cost screens. They're allowing you to use tuition-based program surpluses across any of the other tuition-based programs to cover either non-direct or total cost screens, or to use it within SEIT. So before I go on to the next slide, is this clear to everyone? Does anybody have questions? Anyone can take themselves off mute and ask questions. So I'm going to stop here a second and open it up for questions if anybody has questions.
Ken, could you go back to the first slide?
I can go back to the first slide, James.
And where you were talking about the non-direct care screen, right?
Mm-hmm.
So from what you said, you could use the non-direct care or the surplus against the non-direct care screen.
So if I have a
program.
surplus in my 9100 program, I can use that surplus in my 9100 program to cover a non-direct care screen within the 9100 program, a non-direct care screen within the 9160 program. So yes, I can use it to cover either a non-direct, and it's kind of right
Doesn't
here.
that defeat the purpose of a non-direct care screen
It
existing?
does. It does. It totally defeats the purpose of a non-direct care screen, which is why I never.
You could just eliminate it.
Yeah. In essence, as long as I have surplus, yes.
Okay.
I hear you. When honestly, SED had announced that you can use it against non-direct care screens a year ago. I was actually surprised when they said that a year ago, but it was never clear that you could use it against a non-direct care screen in the same year. And it was never clear that you could use it against a non-direct care screen of another program.
Okay.
Now, with the answer to these questions, that is now clear.
Thanks.
Anybody else have questions before I move on to the next slide?
Can we use the SEIT surplus to be used to cover EI?
No.
So it's
No.
only tuition based.
Yeah, it's only tuition based. So you cannot use the SEIT surplus to cover EI. The SEIT surplus is limited to, yeah. So if you only have a SEIT program, like I know you do, that SEIT program there's been no changes. One of the, you see right here, that was what the purpose of this question was to see if I can utilize those SEIT surpluses for other things. This is actually this question we went back a couple times back and forth with SED on, because I also wanted to know that if you were a for-profit business and you had SEIT surplus, if SEIT surpluses could be distributable, and SED basically clearly came out here in this answer and said no. So, the SEIT surplus is basically limited to future years or for offsetting against other tuition-based programs. Remember also that, I don't know if it was last year or the year before, I think it was last year, SED released something that said that if you generate investment income off your surpluses, that investment income is not offsettable income. So you don't have to offset any investment income that's generated off surpluses. That's important because if you're a SEIT provider and you generate investment income off your SEIT surpluses, my argument is if they're saying that you don't have to offset it for tuition-based programs, I would think then, and this is not, they haven't come out and said it, but I would infer from their response that surpluses on tuition-based programs are not offsettable, that surpluses on SEIT would also be not offsettable, which means that if you do have a for-profit business, you are creating profits within SEIT off investment income, that investment income would not be subject to the surplus rules and would be distributable, which helps, those SEIT providers that are on the phone who have surpluses.
Ken, I have a quick question. There's one sentence you have there that says, but we would not recoup unspent funds. So if you only have a program and you have nowhere to spend that money.
You broke up a little bit, but knowing who is asking the question. So you have a SEIT-only program. As a SEIT-only program, the funds can only be used to offset any other tuition-based programs. You have none, so you only can use this then for future SEIT purposes. So you would have to, if you have an overspending in a future year within your SEIT program, you can utilize some of the SEIT surplus to cover the overspending in a future year, but those funds are limited strictly to SEIT. It's pretty much for SEIT. There's really no change in the regulations from what our understanding was, other than the fact that you can use the SEIT surplus against tuition-based programs. That's the only new aspect that comes in here for SEIT. So if you're a SEIT-only program, there really is no change in the understanding.
Understand.
Any other questions about this before I go on to the next slide? Is this clear to everybody? I know it's very different from what all of us thought. This is one of the times that SED has issued something that's totally positive for tuition-based programs, not for SEIT-only programs, but for tuition-based programs. So some things to think about here. So because these regulations, or I'm sorry, clarifications, they're not regulations, because these clarifications only just recently came out, you may want to review your 2022, 23, 23, 24, and 24, 25 CFRs, right? To see if it makes sense to file an amended CFR, right? Because if you had surpluses in one program and over expenditure in another program and you didn't offset those surpluses, you may want to, it may make sense for you to go back and do an amended CFR. Remember, it doesn't result in additional cash flow because you held on to that cash. All it will do is improve your revenue, your net assets on your financial statements. So we have some clients who know they're going to have losses in the future, so they're just going to hold on to those surpluses and use them in the future. But if you're not sure what the future is going to hold, or you want your financial statements to look better, you may want to think about going back and looking at your 22, 23, 23, 24, and 24, 25 CFRs, see if you had surpluses and losses, and go from there. We're more than happy to help with that if you need. Also, we have clients that have very, very large SEIT surpluses, and they have losses within their tuition-based programs or hitting non-direct care screens. So again, they can carry those SEIT surpluses or go back and file amended CFRs to reflect the use of those SEIT surpluses. There, you're in a situation where it's not going to improve their bottom line profitability. All it's going to do is move net assets from with restriction to without restriction. So that doesn't even change their bottom line net assets. All it's doing is reclassifying net assets from with restriction to without restriction. But for them, that might be because of the size of the amount of money, that might be a positive for them. As I said before, you need board approval. So there needs to be documentation that the board is approving the use of the SEIT surpluses. SED has not released what that should look like. I would say the more detailed you can make that, the board of directors approves the release of $345,000 of surplus from our 9100 program to be used to offset $200,000 of non-direct care screen within the 9100, or offset, I wouldn't even say non-direct care screen, to offset administrative or non-direct costs within the 9100 program, and $145,000 of other costs within the 9160 program. So you want to kind of spell out within that board approval. If it's used in a different year, you want to, again, we're going to take surpluses from this year and use it in that year. So just be specific so that there is no question that the board is approving that. You also have to make sure it's properly disclosed in the financial statements, because remember that the financial statements are supposed to reflect the use of surpluses. There's supposed to be clear documentation within the financial statements with respect to the use of surpluses. And then it's not clear, since this is not going to impact your rates, whether the CFR needs to be recertified. I'm going to say that I believe it probably will need to be recertified. So if you're doing this, go under the assumption that you're probably going to need to get your CFR recertified. But that's something that we do not have a clear understanding of. I would want to make sure that SED understands how the surpluses are being used. It's going to be properly disclosed within the CFR and everything, but I'm not sure that it needs to be recertified. Okay. The only other thing I want to go over with you, and this is nothing to do with surpluses, just happened to be something that I had asked SED. I got an interesting answer that I wasn't expecting. So I'm throwing it out to everybody. I see that the RCM requires bonuses to be paid within 2.5 months of the end of the year. So if you read the reimbursable cost manual, the reimbursable cost manual says that if you're going to give a bonus to staff members, and remember that bonus has to, you have to have a policy, the bonus has to be merit-based and all this other stuff, that any bonuses have to be paid within 2.5 months at the end of the year. That's spelled out within the RCM. I do not see anywhere within the RCM that discusses retroactive raises. So if I want to give a retroactive raise, do I have to give that? So Linda, you said board refers to the organization's board of directors. Yes, it refers to the board of directors. So if I want to give a retroactive raise, am I limited to giving that retroactive raise within that 2.5 months at the end of the year or not? So I said, I have a client that would like to give raises to staff with a retroactive start date to July 1st, 2024 or January 1st, 2025. These are staff they feel have been underpaid and they would like to correct with a retro raise. Is there any prohibition within SED guidelines to give such a retro raise, e.g. limitation as to when raises need to be made by? And the response was, there does not appear to be restrictions that I see. Of course, we wouldn't want to reopen completed CFR and certified rates, and now that this must fit into their tuition rate and subject to screens. So there's no limitation. So if you wanted to give a retroactive raise, let's say you were doing your CFR in November, and you said, okay, I need to spend a little bit more money, and I didn't pay my staff enough. I want to do a retro raise. Based on this, I don't have to have that retro raise within the first 2.5 months at the end of the year. So I have another option other than just pension. I have the ability to potentially give retroactive raises to staff, retroactive to the beginning of the year, whatever. Just you have to remember that, I wouldn't go back and do a retro raise and it's clear that you don't want to do that if the rates have already been closed and certified. So again, it's just one more arrow in your quiver that you can use if there's, a need for it. Something that, again, was news to me. So I figured since I was going over other things with you guys, I'd share this with you too.
And I have a question. Oh, sorry.
You go.
Wow.
You can go.
Everybody at once. Go ahead.
What were the surplus percentages by a year again?
So for 22-23, it was 11%, 23-24 is 11%, 24-25 is 11%, 25-26 is 8%, 26-27 is 5%, 27-28, I believe it goes down to 3%. And then I don't remember past that.
Thank you.
My brain doesn't function that far in advance.
But these
There was another
percentages
question?
are not,
yeah, Ken.
these percentages are not relevant to SEIT program, right? It's only for tuition based.
The surpluses are only for the tuition-based programs. The SEIT program doesn't have any limitation of 11% or anything like that. SEIT, you look at, if you remember your SEIT, you round the expenditures to the nearest dollar. You compare that to the rate, and that differential between the nearest dollar and the rate that you're getting paid becomes your SEIT surplus. Those are restricted funds that you have to use in future years. Difference is that gets picked up as revenue. You have those dollars to use in future years. It's kind of considered restricted. In the world of the surpluses that we're talking about here in the tuition-based programs, if you have a surplus, that surplus gets put on your books as deferred revenue.
And can I ask a question?
Go ahead.
Okay, so first of all, I do appreciate the fact that you do continuously go back and forth with SED asking these questions and getting these answers. And then my question to you is, I have your word and your answers in writing. Are they planning on incorporating any of these responses into some documentation down the line, especially like, the retroactive salary? Like, is it like going to hit an RCM that they're going to say, hey, you can just do retro salaries until your certified CFRs given or some language of that, or am I just relying on an email answer at this point?
Okay, so the first batch of questions, the ones having to do with the surplus, it was an email exchange, but Pam Medeiros was on the email exchange. And SED or Nell did discuss them at the conference that Pam had.
No, but I
So
guess my question still is, are they looking to memorialize these answers?
I don't know.
Okay.
I would love for them to do it. But again, I have no idea whether they will or will not memorialize these. They did memorialize some questions with respect to the surplus. That might be a question for Pam, where I can reach out to Pam, and I think she has a little more clout, unfortunately, with SED than I do, where she can kind of push them to memorialize it.
Okay.
So I will reach out to Pam and ask her to see if she can get SED to add these to what they've already issued with respect to the surpluses. The question about the retro raises, that was came from one of the supervisors after she said she ran it up the flagpole and got the response.
Okay.
So
Yeah, I mean, I just think from the industry's perspective, it would be nice to like have some of this stuff incorporated into the RCM at some degree, to just have it in writing and kind of
all right,
not have to.
I'll send the raise question to Pam
Yeah.
with the response and ask her if, when we deal with the RCM again, if they can put that in the RCM.
And just in terms of, I mean, do you have any idea why they would? I mean, it's such a contradictory thing if they're allowing that, but they're still going to limit the 2.5 months for bonuses. I mean, any logic of that? I mean, it's like, you don't want to look at
pension has never had that
correct
limitation. So there was never that limitation on pension. I think where that 2.5 months came from a bonus perspective, because I did have a conversation with SED years and years ago about the pension, because they were talking about possibly limiting that to 2.5 months also. And when I spoke to them and said, look, that doesn't make sense, because from an IRS perspective, you have many more months to make a contribution. Organizations should have that flexibility within IRS guidelines and not be limited by SED. And they agreed, and they never put that wording in for the pension. IRS guidelines say that if you have an accrual, in order for that accrual to be deductible for tax purposes, it has to be liquidated within 2.5 months of the end of the year. So I don't know why now they're saying that the salary is different from a bonus, but they are. And the RCM does not, again, the only place the RCM limits, the only place it limits is in bonus. There's no limit. If you read about other expenditures or accruals, there's no limit about liquidating any other accrual other than bonus.
I mean, it's just like bonuses are sometimes just a lot cleaner than a salary. And it's like, if you're letting us do one, it's almost comical now.
I understand.
Yeah.
I get it. So
But
then,
I mean,
maybe
the salaries are, it's still nice to be able to offer something other than a pension. So it's a good thing.
then maybe the question with Pam is, look, let's memorialize this and let's see if we can get the 2.5 months eliminated from the bonus.
Yeah, I mean, maybe it's just that, once it's certified, it's kind of like you have up until, your CFR certification to do it. It makes a little more sense. I don't know. All right.
I'll talk to Pam and we'll see if we can kind of do something there.
Follow-up question on that, on the raise. I mean, once you give somebody a retroactive raise, is there a commitment that from either an SED perspective or a tax perspective that remains permanent, so you can't take it back?
That's correct. That's the whole concept of a raise and how a raise differs from a bonus. A bonus is a one-time amount. A raise is added to the salary in perpetuity. So if you're going to take it back, it's not a raise, it's a bonus, and then you're limited. You're limited to all the bonus regs. So if you read within the RCM, there's a distinction between what a bonus and a raise is.
Thank you.
Rosemary had asked, does the surplus get reported on the CFR or just on the financial statements? You report on the financial statements. balance of the surplus, use of the surplus, and things like that. On the CFR, if you're using the surplus, it goes under other income, and you trigger it as a surplus, and I would actually state what year and what program that surplus is coming from. Because remember, SED, when they issue your rate and you look at your T rate or T calc, on the very bottom where you have a surplus, they actually show the surplus on the bottom of that year. So they're tracking, I assume, in some way, shape, or form, the surplus. So you do need to let them know what surpluses you're using and how you're using it. And that'll be clear both from the financials, but also from the CFR. That's me. You don't need to see that. Anything else? All right. Hopefully this was helpful. Hopefully this provided some clarification. If you still need any additional clarification, or if you'd like to ask questions, I'm around. Feel free to reach out and ask whatever questions you have. I'm more than happy to help. This is something that, again, will be hopefully helpful for programs. So thank you, everyone. Appreciate it.